Hi, I'm Joy Macknight, Deputy Editor of The Banker, and I'm here at EuroFinance in Vienna with Ireti Samuel-Ogbu, who is EMEA Head of Payments and Receivables at Citi. Thank you so much for joining me today, Ireti.
Thank you very much.
Can you just tell me some of the challenges that are going on in terms of cash management and receivables?
Okay, thank you. So some of the challenges we see really revolve around regulation. Regulation, interestingly, can be both a challenge and also can be an enabler. But of course, I think in terms of the challenging front, we're finding that regulation is driving the need to have faster payments and to transform payments around EMEA. There's also regulation around, in Europe, around PSD2, which is causing a challenge because the API integration that is envisaged by PSD2 is something which is new and, is not really the way banks operate and integrate with partners and with each other. So defining the standards around that is going to be challenging, and it's going to require quite a bit of work, because between 2018 and 19 PSD2 and open access is going to be implemented. So that comes with its challenges. There's also the FATF regulation, which looks to ensure that remitter and beneficiary information is consistently put in payment messages.
So our corporates' expectations, how are they evolving?
So one of the ways, in fact, the standard way and the long-established way in which corporates are evolving is the whole centralization play. The fact that they need to be more central and need to automate and to optimize their setups. This is the whole kind of globalization as a secular trend has been going on for a while, and that has meant that corporates have had to be more efficient in terms of how they deal globally. But the other interesting aspect about centralization is that, as digital natives are created, who are born global, if you like, and who, just move into new markets overnight, they are not able to put boots on the ground in the way that traditional corporates have done. And that creates challenges in itself, because sometimes if you need to collect locally, the only way to do that is to have a local account. So some of the interesting push-pull factors that we're seeing is that corporates, on the one hand, want to centralize and want to be a lot more nimble, but also you have to open many bank accounts, and you have to be on the ground and collect on the ground, which is kind of a bit contradictory in terms of what corporates want to do. I think the other trend that we're seeing with corporates is new business models, new sales models. And of course, with the connected generation and the fact that we have 5 billion people out of the 7 billion in the world who use cell phones or smartphones, it does mean that traditional companies like the born digital and the digital natives need to find a way to reach individuals and to reach consumers directly. So business models have evolved more from their current bricks and mortar more to more clicks, and you're finding that more individuals, more companies need to reach individuals in a more digital way. So e-commerce is becoming a very important factor. And I think the third kind of trend we see is the whole kind of real-time 24/7 emergence of new rails. There are 18 at least faster payment capabilities globally, which gives treasurers the ability to pay just in time and not to have to hold liquidity in excess and for long periods of time. So that's another trend that's happening that will be beneficial for treasurers.
So how do you think that banks, because a lot of them are dabbling in a lot of different ways in the whole fintech scene, how do you think that they can really make the right bets on what fintech is going to take off in the future?
I think a number of ways. One way is for banks to think like fintechs and to adopt their ways of working. And this is something that Citi has been able to do. Banks are very good at going from big to bigger, not as good as going from small to big. And we've deployed a methodology called the D10X, which is about thinking from seed to scale, about how we start off small and we grow an idea when it's of age and when it's being tested. So one way we think we can understand and pick out the future bets is to be able to behave like fintechs and to adopt their methodology. The other is actually to have an innovation portfolio and to understand what kind of needs are out there and to start coming out with use cases and solutions. And this is something that we do through our innovation lab. We've got some capabilities around what we call our digital bank, which looks at APIs and how we can connect better with fintech. We have some capabilities around risk that enable clients. We built a capability so that a client can know or get an indication before they make a payment whether it's fraudulent. You know, we look at whether it's the beneficiary has been paid before, the currency or the, you know, or the kind of amount, those kind of leading indicators. So we ourselves actually having a digital portfolio and actually investigating different use cases and different solutions, we know what we're trying to solve for and to see what kind of fintechs or whatever kind of partners are out there. And I think, the most, compelling way to know how best to, what kind of fintechs to go for and what's out there is to partner. And, fintechs and banks, to my mind, make a perfect marriage. Fintechs are nimble, agile, innovative. Banks are tried and tested with experience and the regulatory, engagement and knowledge. And putting those two together, I think it's a perfect storm or perfect marriage. And it's a great way to know, how to invest going forward.
Well, that's great. Thank you so much, Ireti.
You're welcome. It's a pleasure.